stocks did a massive turnaround today. At one point, the NASDAQ goes up 1.5% at 10 a.m. If it is down 0.8%. Now, for those of you out there who are new to our channel, I want you to remember that I look at things from a value perspective. I look at this right now and say, so from 10 o'clock till 4 o'clock, the perception of the market was that this current market at 4 o'clock is worth 3% less than the market at 10 a.m. That should be proof that the efficient market theory does not work. It's all about perception and psychology. All investments are people's perception drives the price. What your goal as an investor should be is to understand when the perception does not equate reality. When people's negativity on a stock drives it down so much that they haven't factored in any possible normal news or good news that could possibly justify the current stock price. Because remember, stock price and company are very different things. Stock and the company are very different things. And when I hear an entire stock market goes from 6 hours, a 3% change in 6 hours, how can you not think of it that way and think, well, that just sounds ridiculous. So what was the driver of this? Well, if you look at the chart, it's actually going down like this pretty much through the day. They're blaming it now. And this is what I want you to see about the media. They're blaming it now on Apple's announcements for layoffs and slowing down the hiring. Maybe it wasn't layoffs, it was slowing down hiring. Whenever the markets go a certain way, the news that justifies that story come to the top. Whether it's true or not, it comes to the top. Because the news has to give the stories that answer the question of what happened today in the market. I didn't see anything of anything. I thought the good news today or this last weekend was the Fed is looking at a 0.75% increase when last week everyone was banking on a 1% increase in rates. Not that it matters to me, but I thought to myself, oh my gosh, we're going to have such a big day on Monday when everybody's excited because it's only going to be 0.75% increase in rates, not 1%. Does this make sense? Guys, in the short run, nothing will make sense. That is the point of investing. Again, if you're new to this channel, I am Paul. I'm a value investor. My goal in life is to invest in things, whether it's real estate, businesses, or stocks, that have a mispricing based on what the markets determined the price to be. And if you are of the mindset that the market's always right in its pricing, turn off the channel now, throw it away. Every word I say is going to be useless to you. But if you hear everything I've said so far in the first few minutes of this video, and you sit there and say, man, that is weird. Why would the stock market, the entire stock market, be down 3% from 10 a.m. to 4 p.m.? Unless there was some sort of emotionality in it. That is the point of things. Now, I look at the stock market in general in the last 6 to 9 months. And the NASDAQ's down almost 30% in 7 months. This is the NASDAQ that was high-flying NASDAQ. I mean, absolutely killing it at every front. Every company out there in the NASDAQ was killing it. Look at all these companies absolutely destroying everything with no fundamentals in play. To me, I always said, when the stock market falls, the most overpriced companies will fall the fastest. And we've seen that already happen. Go look at all of our past videos. Videos in which I said I wouldn't pay more than X per stock, and that was 70, 80, 90% lower than they were. And everybody said, you're crazy. And now you hear crickets. Remember, guys, the news is going to justify what the market has done, not the other way around. That is the point in the short run. In the short run, stocks are a voting machine. In the long run, they're a weighing machine. What does that mean? Because this is what Warren Buffett and Charlie Munger say all the time. A voting machine in the short run. This means that it's a popularity contest. Whoever's the most popular, stock will go up. Whoever's least popular, stocks will go down or not go up as much. But in the long run, it's a weighing machine. What's behind the company? What's the balance sheet? What's the cash flow? What's the potential of the business? That's the weight of the business will end up coming to the top in the long run. And that's what I want you to focus on if you choose to follow this channel. If this makes sense to you, very simply, one favor, subscribe to our channel. It's very simple, and I assure you it'll change the way in which you view the world. Because my goal is not just to repeat very common phrases that Warren Buffett says like every other wannabe investor out there. All the other investors out there say, I'm a Warren Buffett disciple. And then you know what they also say? Oh, isn't that interesting? Right here in front of these guys. But then they'll sit there and say, I'm a Warren Buffett disciple. Oh, really? Then why are you only buying stocks that go like this? and you're buying them right here. I'm sitting here saying, I don't care what the chart looks like. What I care about is, what does the company look like? How does their income look in the last 5-10 years? How does their profit look in the last 5-10 years? And more importantly, what's going to happen in the future that justifies today's price or tells me it's undervalued today? If you watch our videos, some of the most boring companies out there are the ones I love. Why? Because if they're boring, everyone ignores them, stock price stays lower. But eventually, over long periods of time, through stock buybacks and building up the balance sheet, investors will get burned too much on companies that are going down 70, 89%, and they'll start looking for the heavily weighted companies, the companies that have the true fundamentals behind them, the companies that have great balance sheets, great cash flow, consistent cash flow, and are selling for good multiples of those cash flows and earnings. Those are the companies that will win in the long run. I actually do this. Go watch our 1,600 videos in the past. We have 1,600 videos in this channel that we've made over the last 2.5 years, and they're very, very consistent. The most common comment I get is, Paul, you're repetitive. That is my goal. My goal is to repeat consistently, because the last time I checked, when Tiger Woods gets ready for a tournament, he does the same things over and over and over again. This man has hit probably tens of millions of golf balls in his lifetime, and guess what he does? He still gets out there on the range every day and hits the exact same shots every day. Repeat over and over. Investing is meant to be boring. We want it to be boring. If it's exciting, it's going to be scary in the future. And the last 6 and 7 months have shown that for the exciting hype stocks that occurred. Now, for the future, do I think this market sell-off is over? Absolutely not. I think we have a lot more to go. I will believe the sell-off is over when I see Apple and Tesla falling hard. And people have given up on those companies because those are the real solid companies everybody loves. Now, I don't believe Tesla's valuation is solid. I think Apple is much more fairly valued than Tesla. But when people have given up on those companies, that's now say, okay, the market sell-off is over. We are a ways away from that. We needed to have the average everyday person. There's a story I tell on the channel over and over. Just a month ago, I was at my bank and I went up to the teller and I was making a deposit, and the teller next to mine said something to me like, what do you do for a living? I'm like, I invest. Oh, great. Are you buying a ton right now? I was like, no, everything's overpriced. He's like, I'm buying a ton. I'm buying Coinbase. I'm buying Tesla. I'm buying Amazon. And I'm buying, I forget what the fourth one was. I always forget the fourth one. And I was like, oh, really? He goes, yeah. I'm like, okay. And I just walked away. A year and a half ago. No, a little over a year ago, the caddy at a country club that I had a golf outing at told me I was wrong on Palantir and Bitcoin. An 18-year-old caddy. He said I didn't understand technology and blockchain, and I didn't understand that Tesla was not a car company, a technology company. How have those stocks done since? When the average person is telling me that I'm wrong, I know I'm onto something, and it's just going to take some time. I need those people to give up completely on investing. When they haven't given up yet, they still look at these investments as an opportunity to buy more. That's how I know things have more to fall. Now, for you, you might sit there and think that's scary. It's not scary. It's an opportunity. You need to reframe your mindset to understanding what drives stocks in the long run, and that's the fundamentals of the business. When you understand that, you will look at red days as an opportunity, not as a bad thing. You'll love the fact that your stocks are going down because you'll say, I can buy more stocks. Because in the long run, here's what happens. Stock values are this, but they do this in terms of pricing. Your job is to invest along the way if you're dollar cost averaging on ETFs. And if you're picking individual stocks, your job is to buy here. But on ETFs, you're going to overpay and you're going to underpay. But over a long period of time, you're going to buy this. When it comes to individual companies, I only want you buying here. That's the hard part. And that's the part that takes discipline. But you're a disciplined person. You know how I know that? You're sitting on YouTube watching a video of me talking about investing. It shows that you're interested in learning and being disciplined. Now, of course, it's harder to do that than to say that. But we have a community in our software at everythingmoney.com of thousands and thousands of people. Over 13,000 people have signed up for this thing since we started it almost 2 years ago. We have thousands of people active every single day in our community talking about these investments because they might not have people around them who think the same way as we do. And we're not the biggest YouTube channel, but we are the best finance YouTube channel because we have the knowledge and the personality to explain things in an easy way. We look at every investment as the present value of all future cash flow. We look at things logically. 10 a.m. to 4 p.m., stocks are down 3%. The entire stock market is down 3% from 10 a.m. peak to the 4 a.m. close. How is that possible? That has to explain something to us. It explains that stocks are not they're based on emotion in the short run. But in the long run, people are going to drive themselves to the stocks that generate the best cash flow and best earnings based on the price you pay. Your job is to buy as much cash flow and earnings as you can for every dollar you spend. Just like in sports, your job is to get on base, get touchdowns, and get baskets as efficiently as possible and as fast. Same thing for investing. It's no different. In your personal life, your goal is to maximize your value as an employee or as a business owner out there. No different than here. But if you are a business owner, you should look at this and say, if I were to buy another business within my industry, how would I value it? When you buy a stock, you're buying a piece of a business. You're not buying a ticker symbol. You're buying a piece of a business. Once you understand that fundamental belief, your life will change. Thank you very much. If you like this video, please subscribe to our channel and click the link above for our 8-pillar process so you can learn more about it. Thank you very much.